Ladies and gents, welcome to the third episode of Thompsin and Other Disappointments. My guest this week, super excited about this one. I wanted this podcast to be more than just a frustrated stand-up guy talking to other frustrated stand-up guys. This chap, if I wanted to know anything about economics, about COVID's impact on the British economy, about finance, about why governments print money, like all of this sort of stuff, this guy is my number one guy to go to. He and I have sort of have a slightly similar trajectory in the sense that we both fell into recruitment, and then I used it as a way to get into tech, but he used it as a way to get on in the hedge fund industry. So the next hour is me talking to him about everything from, I don't know, home ownership to cryptocurrency to actually, yes, some pretty dark, depressing stuff. My advice to you guys would be pour yourself a stiff drink, light yourself a doobie, whatever it is that you do when you need to just chill the fuck out against some bad news, and just sit back and listen to the next, I hope what it is an entertaining hour. But, you know, let's not beat around the bush. There's some pretty interesting projections for what the next 2, 5, 10 years are going to look like. I found it really interesting, fascinating to talk to him. Please welcome Mr. Tom Pontin. Tom Pontin, how are you doing?
Very well, thank you. Thanks for having me on.
Yeah, no worries. Thank you very much for taking time out of this disgustingly, I want to say wintry day, but it's supposedly autumn, but it feels very wintry.
It's just grim, isn't it? It's just grim,
it's
wet and miserable.
Fucking gross. Whereabouts are you at the moment? You sort of look like you're in a warehouse flat in London. Are you?
Yeah, up in town, up in West London, just off Ladbroke Grove, and looking out the window, it is pretty miserable out there.
It's gross. Cool, man. Well, yeah, thanks for taking the time to have a chat with us. I thought you would be an interesting person to have a catch up with, firstly, but secondly, to get your expertise on your career to date and how you ended up in it. I think it's quite an interesting story. And then maybe we can sort of dip our toes into the world of crypto and banking and money a little bit further on, because this is, full disclosure before we go balls deep into this is not my wheelhouse. I don't know how banking works or how finance works. If my boss sees this, yes, I work in a fintech, but I mean, I make things look pretty. I don't know how the rest of it works. So I think it's just going to be really interesting to get your thoughts on industrially how finance works. But yeah, let's start from like day dot, if you like. Who are you, Tom? How did you end up working in hedge funds and finance?
Yeah, it's a slightly unusual path, and I think probably it's worth going back almost to the start, right? So my father was an entrepreneur, and that had quite a big impact on me, I guess, growing up. And when I sort of went up to university, I didn't really know what I was doing in my life. You go up to Manchester in my case, and have a fair old time up there, getting up to all sorts of mischief and some incredible club nights and what have you.
Yeah.
And come away with a degree, which in my case was economics, but it could have been pretty much anything, to be honest. And then I started saying, right, what the hell am I doing with my life? Right. So you look around, you say, at the time, 1995, 1996, boom time in finance, basically, lots of stuff happening. So I thought, I'll just go and work in finance. So I went up and sort of contacted a few different people in the industry. And before I knew it, one of my friends said, look, come and meet with us. I've got a search firm, basically. So come and meet with us, and we can place you into a job in the city. So I went in, and when I went in, the owner of that business basically said to me at the time, look, you've told me you basically love being on the phone, meeting people, making money. Why don't you come and work in recruitment? So I hadn't really planned this at all. So I ended up going into recruitment and having a sort of crazy 3 years working for one of the biggest UK recruiters, which was just absolutely mad, because you had loads of kids running around, basically placing into all the biggest investment banks, hedge funds in the city. We were all, early 20s, newly minted, up in town, lots of girls. It was all quite a fun
Yeah.
time to be alive.
Sounds awful. Yeah. How did you cope?
Yeah, it was amazing, and we were all making more money than a newly qualified lawyer or accountant, right? So you're having just a great time.
Yeah.
And after 3 years, I was like, look, this has been great, but I need to go and do something, that's going to be a career for the long term.
Yeah.
So I basically placed myself. I contacted all the people who were looking for jobs at the time. I actually loaded my details up onto the system as if I was a candidate, and I basically placed myself effectively into a job for an asset management company called Foreign and Colonial at the time, now Bank of Montreal. And,
right. Let's just pivot there for a second. So you uploaded your own CV as an applicant, as a candidate, and then sent yourself for an interview.
Basically, yeah.
Nice, yeah. I mean, that's that entrepreneurial spirit coming through there.
Yeah, exactly. And so I ended up at F&C, and it was a really odd company, F&C, and it's still around today. Probably still quite odd, frankly.
Yeah.
They manage about 150 billion in assets, or they did around that time. So it's a big firm, but they were very, very old school. So you had this incredibly sort of old school business, which then had a sort of hedge fund arm that no one really knew about or talked about.
Right.
Which was basically staffed by some of the biggest brains in the industry. So these guys, and probably I might start losing the audience here, but they traded some of the most complex derivatives you've ever heard of. In fact, they traded what was the first ever variance swap, for example.
Can you tell us tell me what is a derivative, and what are these asset classes that you're touching on here?
Yeah, so a derivative is just a way of getting exposure to an underlying asset. So right. The asset could be an equity or a bond or an equity index. So any instrument that could be traded that you might trade as your sort of own trading account, or any financial market instrument. And a derivative is a way of getting an exposure to that without putting all of the capital up to get that exposure.
Right. Okay.
So, for example, if I want to have exposure to S&P, I can go and buy the S&P directly, right, or an ETF on the S&P, or I can go and buy a future.
Right.
And the beauty of buying a future, which is a derivative of the S&P, is that I'm only paying a fraction of the total value of the S&P.
And so then what you're doing effectively is betting on the performance of that asset or company in the future, right?
Yeah, exactly. Okay. And the thing that's really interesting about that, because I'm only paying a fraction, let's call it 10% of the total value in the case of the S&P.
Yeah.
I can actually, with my £1 million that I'm going to expend, I can actually get 10 times as much exposure, for argument's sake.
Right.
So the beauty of derivatives, you can get much more exposure. You can get leverage. And then we move on to the next part, which is short selling, which is this concept that people really struggle with.
Yeah.
But this is the idea that you can borrow an asset, sell it effectively into the open market, and then buy it back at a lower price.
Right. Okay.
And therefore make money.
Yeah.
I can see your eyes going slightly cross-eyed at this point.
Oh, right. Okay. So, well, let's think of a working example, because everyone is familiar with the term short selling, and it has the connotations of a sort of shrewd, perhaps, but kind of almost like Machiavellian layers to it, where people think like, oh, that guy is a real prick.
You can be ruder than that.
Because
he can be a lot ruder.
Yeah. Well, there's this idea. Like, I have sort of mental images of some guy in a suit shorting a very healthy company, because they're putting negative PR out into the marketplace to then rock the standing of the business, and then the business goes under and the short seller makes a killing, but 10,000 people lose their jobs. That's the sort of cliche, isn't it? The archetypal short sell. But where am I going wrong with that? Is that fair? Or?
No, I mean there are unscrupulous people who do that. But I think that's a sort of overly simplistic and potentially negative way of thinking about it. Let me rephrase it a different way. So you have an industry where all of the participants in that industry are aligned in the fact that they only want asset prices to go up.
Okay.
Right? So what we have at the moment is an industry where our pensions, our asset management businesses, our own holdings in companies that we might be involved in, all of us, and central banks and governments just want the price of things to keep going up and up and up.
Sure, yeah.
Now, the problem with that is it's not sustainable.
Right.
You can't have compounding growth at above a certain level ad infinitum, right? It's not just a perfect, beautiful curve going upwards all the time.
Right.
So what naturally happens, what I can see you want to ask a question, but I want to get this
Sure. Yeah. No, you crack on.
So what naturally happens in markets is you end up with, for example, the Dutch tulip mania or the South Sea bubble, right? You end up with huge bubbles where asset prices just go up and up and up. So what you need to have in this ecosystem of finance is a market participant who is incentivized by making money by saying, do you know what? Those mortgage-backed securities that all the investment banks are selling are complete bullshit.
Yeah. Oh, right. Okay.
It's only the hedge fund guys who can do that, right? Because we're the only ones really that can profit from shorting equities in this case.
Yeah. So then I suppose that, like the devil's advocate or whatever would be that the hedge fund or the shorter in that scenario is the quality control of that investment. They're saying like, right, you guys are saying that this is going to go up and up and up and up forever. What I'm saying is that's ridiculous. And actually you need to look at the finite detail within it. And then you'll see that this is probably not as rosy as they're suggesting.
That's exactly right. It's a great analogy.
Okay, cool. So then let's just go back to you getting into this. So then you worked at, you say Foreign and Colonial for how long?
Yeah. I was there for a few years, and then 2007 hit. You had what was called the Quantum Meltdown, which nobody really outside of finance talks about, but it was kind of the precursor to the global financial crisis, which happened the following year.
Right.
And it was basically all the hedge funds, which by this stage were early into computer-driven models. Basically, they all had a hissy fit over the summer of 2007. And you started seeing some terrible returns. Some very big funds, including GSR, Goldman Sachs's hedge fund, which was 17 billion or something at the time, blew up, right? They had terrible returns and had to give all their money back.
Right.
So you had this sort of extraordinary period for those of us in the industry. And I got kind of called out by that with my firm because we were basically, now we are getting technically, but we're basically short volatility. So what we were saying is, volatility is getting lower and lower and lower and compressing. And then suddenly you had kind of 2007 and 2008 where volatility blows out massively. Right, and my firm F&C got completely carried out, with the global financial crisis. So basically, we all left and went our separate ways, basically.
And was it like a situation like the sort of famous images of Lehman's where people are like, I don't know what to tell you, it's all fucked. Like, here's a brown box, put all your shit in it and get out. Or was it kind of?
Yeah, I mean,
really?
I had the sweetest HR guy who he sort of I was one of these young graduate intake guys, and he came in, and I'm sad to say the guy was crying as he was letting me go.
Really?
I really still to this day, I haven't seen him since, but I still really feel for the guy. And I said, look, this is what we do. You live by the sword, you die by the sword, and this is all part and parcel. It's the creative destruction of finance.
Yeah.
And actually, we've lost that.
I don't think I had any concept of what was going on when all of that happened. I was working in RBS, also in HR, sort of. I was working in recruitment.
I remember that.
Yeah, and
just over the road from where we were.
Yeah. Well, in a sister company, in fact, to where you were doing recruitment before. But I knew that there was a bailout, and I knew that everyone was saying things on the news that seemed very serious. But I didn't really have any, certainly no expertise and no real depth of understanding as to how serious things were getting. It was only years later that I was watching, like Panorama documentaries and stuff. And people were saying things like, oh, yeah, like we were about 24 hours away from ATMs no longer issuing money. I'm like, fuck, what was I doing? I was just like in a pub over the road, probably getting hammered, thinking like, so everything seems a bit weird, but I'm sure it'll be all right.
But that's human nature, right? I mean, it's the same with everything that's going on at the moment. People aren't questioning it. We're all just keeping our heads down and doing what we're told. And, that seems to be the way of things.
Yeah, I suppose there's this sort of undercurrent of fear at the moment where, there is a lot of uncertainty in the markets, and there's been a lot of bailing out again, and nobody really knows what impact that's going to have over the next year or 5 years or 10 years. But everybody's got this sort of keep calm and carry on mentality where it's like, if I think about this too deeply, I might actually have some sort of nervous breakdown. So I'm just going to clock in for work and, go shopping, feed the family and and crack on. I don't know what,
But
like,
it's always been like this, right? This is the history of the relationship between governments and their people, right? And it can go back to, as far as you like, but, in recent times, the Cold War, this is the idea that we're all going to die from mutually assured destruction. More recently, obviously, we've got COVID. Back then, it was the financial collapse. We've had Brexit. This is all just a stick to beat people with, to make them, to push them down, basically.
So what do you think will happen next then? Like in the next sort of, obviously you don't have a crystal ball, but if you were a betting man, how do you think the next sort of 1-2 years is going to look in Britain?
So there's sort of multiple things bundled into that. I think one of the most sort of interesting things about this whole 2020 period is that Brexit has almost become a footnote. Something that was so important to us.
Yeah,
It's become a footnote. And the thing before that was austerity, right,
yeah.
here in the UK. I don't know how international your listenership is. I'm sure you've got people from all around the world.
Far and wide, every continent, mate. Yeah.
When we think about austerity, for example, I pulled a stat off, from listening to a podcast last night, and basically 1/3 of every dollar ever printed has been printed this year, right?
Really?
So when we think about money printing and austerity and governments buying their own debt with their own money, just printing money and then buying their own debt with it.
Yeah.
Well, this year has just knocked austerity and Brexit into a cocked hat, right, and said that's completely immaterial. This now is what we all need to focus on. And so, in answer to your question, what we're going to see over the next couple of years is lots of volatility and a very weird situation where we're going to have simultaneous inflation and deflation depending on the assets.
Right. And how will that look like for like a regular person with a house and a job and food price? Like how is that going to look
for you, basically? How does it affect?
Let's bring this back to me, Tom.
So there's multiple things that you can package up into all this, right? So from a very basic perspective, printing tons of money, right, ends up going into the financial system into different ways, right? Initially, when they started quantitative easing, which is what we're talking about ultimately, printing money and buying bonds, right?
Yeah.
And then they basically realized that was becoming less and less effective. So then they started dabbling in other areas. And now you're seeing the central banks buying equities and junk bonds and corporate bonds and basically just trying to keep all markets raised as long as they can, right? Trump, let's push up markets as much as we can.
Yeah.
The whole global economy is basically, and this goes back to this point that I was making, which is it's basically this David versus Goliath battle between the hedge funds and the people who can short sell and the whole of the financial ecosystem, which is basically all based on looking after the incumbents, right? It's about looking after Goldman Sachs. It's about looking after Morgan Stanley, JP Morgan, and the big boys. It's about looking after the roles of the central banks. It's about Carney going from Goldman Sachs to the Bank of England, back to Goldman Sachs, then into the probably the government of Canada. This constant sort of revolving of these powerful figures, Barroso, and we see it obviously in the European Union as well. But coming back to your question, so we're going to see lots of volatility. We're going to see, in terms of your life, in terms of aid, what we're going to see probably is a real bifurcation. So for example, TVs are always used as an example for inflation, right? Oh, well, my flat screen television is so much cheaper. And yes, that is true. So certain objects become cheaper and cheaper and cheaper. And that's largely because we've inducted billions of Chinese into the global system, basically. So the last few years have been heavily deflationary. You've had these contrary forces of money printing on one hand, and then basically bringing in a load of mostly Chinese and across the sort of developing world into the developed world, which is naturally deflationary. So you've got these sort of contrary things. So what we've had in the last few years is mostly deflationary. However, I don't know when the last time you bought a Mayfair townhouse was, or a 1960s Ferrari 250 GTO.
Yeah.
But the prices of those motherfuckers have gone through the roof.
Yeah.
Right. So the other end of the spectrum, very scarce resources, right, like prime central London property or a Monet or whatever it is that the very, very wealthy people, of who I'm not one, just to make that absolutely clear, but I get some visibility on this stuff. you're starting to see, those prices go through the roof. I think, artwork, for example, my wife is an art consultant, and artwork is something like 26% annualized return in art, for example, over recent years. Classic cars, very similar. I love racing and cars, and would love to be able to do more of it.
Yeah.
I look at car prices and they've just been crazy this last couple of years. And so, for you, Aid, I think that the thing is, cost of living is generally going to go down. But I think we're now at a point where we're going to start seeing inflation really across the board. So that means in asset prices, and that includes all the input prices. So, for example, the whole world now is moving towards this green New Deal, right? The New Deal, the New World Order, right? So what's that going to mean? We're all going to have to move to buy Teslas, right? So we're all going to need copper. We're going to need heavy metals, right? And the prices of all these sorts of things are going to go through the roof, and the prices of your solar panels are going to go through the roof, your Tesla. So it's going to be a very tumultuous period. Some things are going to really go up in value. Some things are going to go down in value. And that's a great opportunity for traders, frankly.
Yeah, I was going to say, so that's sort of, you can expect a lot of money to be made on the Forex markets, right? Which is famously, you need volatility within that world, right?
So the Forex markets are the purest, in many ways, expression of, a country at a very, very macro level, right? Because they're too big to be fucked around. But the size of the I'm sorry if I'm losing you your swearing rating.
No, we're all good.
The Forex markets are such deep pools that they're very hard to be manipulated by central banks or other groups. So yes, in short answer, bond markets are very, very manipulated now. Equity markets are very high and just loads of money being flowing into them. So FX or Forex is really where I think we're going to start seeing real movement happening, let's put it that way, over the coming years.
Yeah. And then, so just sort of going back to what we were saying before about short selling, in that kind of scenario, we're talking about a business, a company, a corporation, somebody doing some analysis on them and then seeing that maybe not everything is above board and then saying, actually, I'd think twice about this. And if we take that kind of analysis, like that approach to governments or countries, you can't short sell a country, right? But there is a lot of skepticism about central banks and how money is, like, I mean, we were just talking a second ago about just printing money just so you can buy. Where, like, if I'm an investor and I want to publicly question the credibility of, let's say, the ECB or the Federal Reserve or something, how does that happen?
It's basically impossible. Right. And there's a very famous fund manager, and some would now say infamous fund manager called George Soros. And famously, he basically made a bet that the UK exchange rate mechanism with the euro basically would break apart, and he made $1 billion personal on that day through trading that.
Wow.
These days, I'm sorry to say, the hedge fund industry are way too small. You just cannot compete with the central banks. And so you have a bunch of people in finance. This was quite a fringe view maybe 5 years ago, that QE and money printing, this was all getting excessive. But now it's like people realize that we're at a point where we can't put the genie back in the bottle. And so now they're just like, we have to go with it. We just have to keep printing and printing money.
Right.
So
what would happen if they stopped QEing?
Basically, they've kind of tapered a little bit, and they have what's called the taper tantrum, right, where markets just sold off, equity markets fell. It was like a tiny little, we might just be trimming a little bit, and then suddenly markets just shit themselves.
Right.
So if that was just a hint of tapering, right? Imagine what it'd be like if it was like, actually, we're not buying any more bonds. You guys, it's over to you, right?
Yeah.
Well, I mean, we're at a point now where global debt is so high it will never get repaid.
Yeah.
I'm just going to let that sink in. It will never, ever get repaid, right?
Yeah.
So what I think is going to happen is they're just going to say, oh, look, guys, it wasn't our fault. There was this terrible COVID disease, and it was a global pandemic. It was so awful, and so we had to print all this money because otherwise, who knows what would have happened?
Yeah.
Right. And then what they're going to say is, but it's okay because now we're just going to all have a debt jubilee, right? So they'll create basically some kind of, and you're seeing this already with the euro bonds that have been created in recent months, if the German Constitutional Court allows them to. And then you have it probably globally. I think governments are just going to say, do you know what, guys? We're all in debt. We owe it all to each other.
Yeah.
We're just going to have a haircut, as we call it. We're just going
Right.
to forgive it,
Yeah.
right? And at that point, that's when shit really gets kicked off, because that basically people will start to question the currency that's in their pocket.
Yeah.
Right? They'll start to question fiat currencies. They will say, look, this pound that I have today, it's not going to be worth a pound in a year. It's going to be worth 90p if I'm lucky.
Yeah.
Right? People are just not going to want to hold cash. Right? They're not going to, and people are already saying this. Very, very significant investors in the world are already saying this. So they're going to say, do you know what? I'm not comfortable with this. And this is where real assets like property, gold, which is the original currency, right?
And traditionally the currency you flock to in uncertain times, right?
Absolutely. And now Bitcoin and to a lesser extent Ether.
I was just going to say, yeah. So traditionally you would lean towards gold in an uncertain time, but now we're just sort of, certainly over the last 5 years, we've kind of moved more aggressively into the crypto world. And I think it used to be seen as a sort of, it'll be like my cousin who's a real nerd and he sits in his basement and he mined a couple of cryptocurrency. Like, it was this sort of cliche of, the geek might get involved in it, but now it's very much kind of knocking at the door of the mainstream, right?
Yeah, exactly.
So what's your sense of how that's going to mature over the next 2 to 5 years? Again, I'm asking you to look in your crystal ball, but is crypto something that is troubling or exciting people in the hedge fund world?
I would say definitely exciting, right? So crypto is only troubling if you're a central banker or you are a politician, frankly. There's a famous guy, and if they haven't turned off already, and they are interested in what we're saying, there's another podcast called Real Vision by a guy called Raoul Pal. And he talks about this as being basically as hoovering up the whole of investment assets, right? So if you think about it, the beauty of crypto, right, and the beauty of Bitcoin specifically, is it's finite, right? So there's only a finite amount of it in the world, right? Like gold, I think there's a statistic where gold is, if you put all of the gold in the world that's ever been mined together, it would fit underneath the Eiffel Tower in Paris.
Right.
Right, and Bitcoin is the same concept. It's a finite asset. There's a limit on how much there will ever be.
Yeah.
Right? And so it's uncorruptible. Right. What I mean by that is the central banks can't fuck with it. Right?
Yeah.
They can't try and print more of it. Right. So for those of us who are looking and going, well, hang on a second, I don't believe these inflation statistics that the government are giving us. I don't believe RPI and CPI and how we benchmark nurses' wages and all this sort of stuff.
Yeah.
I actually think real world inflation, the inflation that I see when I go to the shops or, I want to buy a house, it's been way more than that. So for me, you've got gold, which is your store of value, right? That's your real value. And to me, you should price everything against gold, right? So your house is worth X number of ounces of gold, right? Yeah. And actually, if you look at those numbers, those are very constant, to be honest, right? What has gone up in house prices, let's say, is basically this, it's not that the house price has gone up, it's that your currency has gone down.
Right.
Right. And the governments all want their currencies to go down because they have so much debt.
Yeah.
It makes their debt much easier to pay off.
Right, I see.
You got it?
Yeah.
Right. So a bond, right? Most bonds are 10 or 20 years, right? So you're saying basically, like a bond is basically saying, I will pay you a certain level of interest, and at the end of 20 years, I'll give you the original amount back. So £1,000 bond, you give your yield each year 1% a year, and then at the end of the period, you get your £1,000 back, right? Well, if at the end of that period your £1,000 isn't worth £1,000 today, it's actually worth £500.
Yeah.
£400, £300, right? Do you see what I mean?
Yeah.
And you can keep refining all the way up, right? You can just keep refinancing all the way up the curve.
Yeah. So then,
what would you do if you're a central bank?
Yeah. Well, the other thing I was going to say, so if cryptocurrency is such a threat to central banks and to the system. I'll give you my experience or example of what happened to me with crypto. So I think it was about just over 4 years ago now. I started buying not Bitcoins plural, but like sort of percentages of Bitcoin using a mobile phone app. And like I had this idea that I was like, do you know what? I spend a fuckload on coffee every day. I was going into the office like 3 coffees a day in this little cafe, and I just thought I'll make a coffee in the little shitty cafe like kitchenette bit, and instead every time I'm going up for a coffee, I'll just buy like a coffee's worth of Bitcoin, right? Just, more than anything, just to show how much I was fucking spending on coffee every day and every month. So off I went doing this, and I ended up putting about 250, 300 quid into it. And I was shocked by how much the value of this was going up. It was just every day going, like, this was really in that sort of first burst of Bitcoin like shooting up in value. And it reached a peak of, I think from memory, about 1.2k or 1.3k. And I was like, this is amazing. Biggest advocate for crypto ever. And then my son was about to be born, and we decided to go on like a baby moon thing. And I thought, oh well, this will pay for like, you know, us going away and spending money and stuff. So I said to my girlfriend, I was like, yeah, don't worry about it, I'll pay for it. I've got my Bitcoin money, and I'd got like a Visa thing that I could literally draw the cash out with. And then literally the day before we were going away on this baby moon, I tried to draw out like 200 quid the night before just to get some bits and bobs, and it just said no, like declined. And I was like, what the fuck? And then I thought, oh, it must just be that ATM. Next day, we're at the airport and I'm trying to draw up money with this thing, and it's like, no, can't do it. Then I started Googling frantically, going like, what the fuck is going on with this? And I found this, like a news report saying that not the actual card issuer, but the card issuer's thing that they got the license from or something, they'd had their license revoked immediately with no notice, over something to do with like government confidence in crypto or something. And it, like, I lost not just £1,000 out of it, but like the headache of having to transfer. Like, I managed to get the money to my friend's Italian account by SEPA transfer or something, and then he had to convert it to euros and then send it to his UK. Anyway, like, there was a really long pain in the arse, and it whittled down to £300 that I managed to get out at the end of it. And after that, I was like, what a fucking ball ache.
Oh, sorry to hear.
I'd lost basically everything that I'd made on it. And and it just made me think, okay, well, let's say odds on, I think, that Bitcoin will continue to go up in value. It might not be drastically the way that it was over those first few months.
Yeah.
But probably it's a good investment because it's the chairman of the board in terms of crypto. But if I continue to invest, let's say I put in 10k or 50k this time, and then a central bank or their friend in government or somebody basically says this is a real threat to central banks everywhere and to the system, let's cancel them, let's pull out their license last minute. Like, I can't afford to lose 50 grand. So I wonder, how is this going to play out? Because at some point, the new kid on the block of crypto and the oldie worldy of central banks is really going to come to a head, right? So how are we going to make those two play nicely?
Well, and this is the absolute nub of it, right? So on one hand, one end of the spectrum, you've got this idea that the central banks and the regulators are going to basically ban this, right? So they've tried that in various ways, but the thing is about crypto, and this is the beauty of it, right? And this is why it's was originally enjoyed by Silk Road and all the dodgy people you can imagine that inhabit the dark web.
Yeah.
I can see that 1,000-yard look in your eye when I mentioned the dark web.
No, and so, the dark web, you say? Yeah.
So on one hand, they can try and ban it, but there's always going to be a Russia or Panama or somewhere you can go, right? To you can just fly in for the day and then just release it and put it into rubles, whatever, right? Someone's always going to offer crypto tourism, right? So I think they've realised that the genie's out of the bottle and they can't do anything about it, right? So then what they tried to do is say, right, we're going to have our own digital currencies.
Yeah.
And you're seeing like rumors about this, white papers written by Bank of England and other people, Italians talking about mini bots, all these various different ideas kind of floating around, right? And this is really, really fascinating, right? Because the government can have their own digital currency, right? And again, it just so happens that with crypto, we can suddenly now just ban physical currencies, right? We can just move everybody into it. Now, governments love that, right? Because suddenly there's no crime anymore, right? It's very hard to transact crime. If you've got no cash, this sort of idea of the cashless society, the government can see everything you're doing, right? Which means they can tax you on everything you're doing, and they love that, right? They have control, right? They can see everything. They love that as well, right? So all the sort of really terrible, scary things that we're experiencing in 2020 are kind of all coming to a head. And frankly, it's got nothing to do with COVID. It's got way more to do with surveillance society and all the other sort of issues that we're experiencing in sort of governments globally. And we see that manifesting itself in the Chinese Communist Party and the way they treat individuals, the way that they have facial recognition, the way they're scoring their citizens. We can kind of see a roadmap for where things are going, right? And it doesn't look good, right? It's frankly terrifying.
I think the most scary thing about that is if, let's say that we move into a government-sanctioned cryptocurrency, or the US and the UK and the EU all decide in unison, okay, look, Bitcoin is too big to, like you say, like to put the genie back in the bottle. Let's try and formalize it. Let's try and put some structure around it and then make it our own thing and regulate it. The most terrifying thing about that is, I mean, how the fuck are you going to buy drugs if the government can see what you're doing? This is devastating.
Yeah. But I mean, I would posit, I mean, I understand that is a big concern for some people, but I would posit what's even scarier about that is they say, right, you, Tom, right, it's a digital currency, right? They can apply whatever interest rate they want, right? So for people who are, I'm doing okay, let's put it that way, right? They'll say, right, you're going to have a negative interest rate of 5%, right? They want people who have money to go out and spend, right? So the wealthier you are, the higher effectively your negative interest rate will be, right? So you're out spending money and recycling money in the economy. So the £100 you have today is only going to be worth £80 in a couple of months' time, basically. So you're incentivized to spend it. And then they can give pensioners a savings rate, right? So they can give pensioners a plus 5% pension rate. Right? So you can have bespoke, inflation rates or interest rates, positive or negative, and they can punish you.
Do you think it will get that radical? I imagine if they did something like that, people would be in uproar. They would just be like, that's like everyone is equal. And if I save £10 this week, then it should be the same rate as like my mum or gran.
Honestly, I think we're just a few years away from Blade Runner at this point.
Really? Yeah, I don't know, man. Like I think, like, I can't imagine a universal cryptocurrency taking hold at the moment. I think people who get into crypto like the fact that it's, the new kid on the block and it's unofficial and they can get up to whatever they like out there. I think as soon as it became regulated, like you suggested a minute ago, something else will come up. Like if they somehow manage to wrap a net around Bitcoin, so like it would be Ether, or it would be, I don't know, AidCoin or something. Like there would be some way of getting around it, because frankly, I know that you and I are moral, upstanding citizens. There's a lot of people out there who have a vested interest, and who have influence. Let's be real about it. Like people who have made an awful lot of money out of, let's say, the opium trade, who have the ear of key decision makers, whose interest it is not in to then say, yeah, okay, let's get everything right, guys.
But it's going to be such an interesting period, this one, because it can go one or two ways. We're either going to go incredibly authoritarian, and governments are going to try and control every inch of our lives, or you're going to go the other way, and we're going to go towards a much more libertarian society where people say, you know what, we've tried big government, it hasn't worked, we've bankrupted the whole system, and I think there's going to be a big financial collapse in the coming years, and I think gold and crypto are going to be a big part of how you survive that. But I think there's going to be, I'm sorry to say, some really, really difficult times over the coming years. for sadly, most people are going to lose their pensions, they're going to lose their homes, and I think it would be a real big shock. And I think in that in that environment, having a little bit of crypto or a little bit of gold, or ideally both, is definitely good. And look, I'm only talking about the negative aspects of this, but if you look at, for example, Ethereum as an ecosystem, and all the incredible things you can do in terms of DeFi and that side of things, it's incredible, the power of it. And I'm only now really starting to see the apps that get built off the back of this. The custody. I mean, custody is such a big thing in finance, but this is the idea of the person that holds your assets, right? So if you can have somebody who can actually say, you, A. Thompson, right, I can see you have a property and that's on the blockchain, and you have some crypto assets, and you have some gold, and you have X, Y, Z, then suddenly it's a lot more tangible, right? And people will say, oh, okay, I can lend money to Aid. He's got a house and and things become a lot cleaner, and we can completely disintermediate the banks. Right, and that's what's going to happen, and that's what I think is really exciting.
I talked to Lucy, my girlfriend, a lot about this, about how, because she works in property, and to my mind, like when we bought our place, it seemed so clear to me that it was so ripe for a complete overhaul with something like blockchain, because it just takes so fucking long to get everything done, and you're dealing with like hard copies of things and signatures with has to be a black biro, and I'm like, this is fucking ridiculous. Like, why have I got to drive down to this little solicitor office in like the other side of London, and then wait 4 weeks and 28-day periods and all this stuff? Like, the way that this should work is, I go onto a portal, I enter in my date of birth, my national insurance number, they can find me, they verify that I am who I say I am, then they issue me a PIN, and and then there is like you said a minute ago, like there is a blockchain element to it that is basically unhackable, that represents your asset or your investment. And then furthermore, you could adapt and evolve that, where it's not just me with my asset paying like 400k for a house. It's me and, let's say, 10 other people who have all then split the asset, and we all have a proportion of that piece of the blockchain. Like, that actually wouldn't be that difficult to code up. I mean, I know it sounds a bit fantastical, but speaking as a technologist, you're talking about a sort of 2, 3, 4 teams of devs over a period of 6 months to get like an MVP, maybe a year to get proof of concept territory and demo it. And yet here we are 5 years deep into blockchain, and absolutely none of that has moved forward. And
I mean, tokenization is obviously a huge part of it, and for property, so much of a country's wealth is actually tied up in its property markets, right? And that's why central banks are so keen to have low interest rates and people not to lose their homes. And there's so many interesting aspects of that. Thatcher, I'm sorry to mention her name, everybody, but her idea of giving everybody a home was really because think of the period of the time, right? Very low take up of property, right? So, and people were rioting, right? You had the miners' strikes, everything else, right? Somebody owns their own property, then they're very unlikely to go out rioting. They're very unlikely to go out and cause trouble, right? Because having your own home, it's been shown during wartime that actually losing your home can be more traumatic than losing a loved one, losing a family member. So
I believe
be
it.
A real,
I mean, I love my family members, don't get me wrong, but it's like, I've often wondered what so we talk a lot, or have talked a lot over the last couple of episodes of this, about Twitter and about people becoming social justice warriors and campaigning and ranting, and I wonder to what extent home ownership has played a role within that, because I think you're onto something there. I think like the studies, if they do show that, are backing up what I've mused on before, where I'm like, if I go out and I buy a house and I've got a mortgage and I know it's there for 25 years or 30 years, and I'm paying into that every month to chip away to have somewhere for my family to grow up and grow old, there's an investment in society in that, and I just need to go to work every day and earn the money and come back home and think about how I'm going to get promoted, etc., etc. When you take someone out of that scenario and you put them into a different world where they are renting, and 2/3 of their income, and I've fucking been in this world for a while, And yeah, 2/3 of their income goes on their rent. They can't save. They can't get a fucking deposit together. There's no housing schemes for them to jump on or try and get on. I wonder what that does to someone's psychology in terms of how they busy themselves, how they justify that they're not getting on. What
is the point? What is the point? If you're a disenfranchised kid now, and you're at school with 30 kids in your class, and you're not getting any attention, and you're looking ahead and you're thinking, I'm never going to own a property, right? I'm probably never going to have a half decent salary. I'm probably going to get paid MMT. This idea that we're all going to get just paid by the government to sit on our asses or do whatever we want to do, right? And probably I'll never own any actual asset. I'll probably never own my property. What is the point?
Yeah,
I'm not saying that owning property is the be all and end all. Not far from it, right? But actually, unless you are striving to do something, to make something of yourself, what is the point of it all? And frankly, the most terrible thing about this quantitative easing bit, and the bit that people I think don't really understand, because they just think of this as a financial thing. They don't really think of the social impact of this. But making UK house prices so bloody high, right, that they're 10 times the average earnings has actually disenfranchised a whole generation of not even kids now, right? I'm probably at 40 years old, you and I, right on the cusp of ever owning. Most people younger than us will never own a home.
Yeah.
That's a terrible, terrible thought.
But it's like, I mean, how do you correct that? Like, is it the trajectory that I always think that we've ended up on is basically that successive governments have failed to build sufficient numbers of houses. And whenever they broach the subject of, do you know what, we should build 500,000 new homes, or we should build 750k new homes because that's how many we need to build every fucking year until we get this right. As soon as they say to, let's say, my MP in Aldershot, you've got to build fucking 50,000 homes. The MP will be like,
NIMBYs will come out and say, "Oh no, I don't want that built in my back garden." Well, bollocks to you.
Even worse, like the MP will just go like, "Well, I could do that, but yeah, as soon as I build 500 new builds around this area, we're going to lose this seat because I promised them that they could keep their countryside back garden." And so then they just don't get built, and then they keep the voters, and the homeowners continue to vote, let's say, Conservative.
Yeah.
But the problem with that is that as the homeowners get older and die, fewer and fewer people become the homeowners, but also get more and more desperate in that rent trap. And what I hope happens is that there is some sort of shift in policy to reflect the urgent need for building homes before the masses actually get really out of hand, because I think it could easily spill into a situation where AI and machine learning are taking away a lot more jobs, and that number grows year on year, and I think homes become harder and harder to buy, and I wonder what that will look like in sort of 5-10 years time when people are so desperate.
Here's a really scary thought for you, right? So there are now, and I'm going to look at my notes here, $18 trillion of negative yielding debt. Right, 18 trillion. I mean, that's a number that we just can't even.
I'm too confused to even get terrified by it.
Yeah, exactly.
What does that mean for an idiot like me?
People spout these big numbers, but I mean, it's just such a huge proportion, right? So all the debt in existence, most of it now is negative yielding, right? So most people, and there's a famous hedge fund manager called Ray Dalio, who it's worth downloading his book Principle. Or it's a pamphlet called Principle. Very interesting side note there.
Okay.
18 trillion of negative yielding debt. What does that mean? That means that global investors basically shouldn't own debt, right? No one should own bonds in a country anymore, because it's basically you're just going to lose money, right? It's a guarantee, right? So where's that money going to go? So you've got printing all this money and yet making the whole bond market uninvestable.
Yeah.
Right? All it does is it pushes all the money somewhere else. Now, if I'm looking for a steady income on a regular basis, and I think equity markets are toppy, where am I going to put my money? I'm going to buy property.
Yeah.
Right? Oh, shit. What's that going to do? It's going to drive up the property market.
Yeah.
It's going to drive up rents.
Yeah.
And it's going to squeeze the yield, i.e. the return versus the price. It's going to get lower and lower and lower.
Yeah.
But still in absolute terms going up. If you're Mr. Renter, right, if you are that 25-year-old kid who's moved up to London to get their first job, well, I'm sorry, your rent is still going to be 2/3 of your salary.
Yeah.
but the value of that property is going to go up and up and up.
Yeah.
Right. So the whole system is basically a geared way of pushing up house prices.
Yeah.
And frankly, there's only one way this whole thing can end, which is a massive financial collapse. And I say massive. 2008. You said you were there, at the pub, thinking this is all a bit odd. I'm sure we'll get through it, right? The next one isn't going to be like that. It's going to be like the Weimar Republic, people wheelbarrowing notes in it down the road and to exchange for a loaf of bread, and frankly, rioting and ATMs being out of cash. I mean, I really do think things could get that serious.
So I guess one of my final questions, because I'll have to wrap up in a second, but let's assume that you're right. Everything collapses. What does Tom Pontin do in the post-apocalyptic world? What do you see yourself as? Warlord? Farmer? Playwright?
My hope, right, is that by that point in time, I have escaped. Right.
Yeah.
So we talk about it openly, my wife and I.
Yeah.
I want to be what we call the nuclear option. I want to be out of the country, certainly out of the cities. Right. I want to be on my own land.
Yeah.
Generating my own electricity.
Yeah.
Because electricity prices are going to go through the roof. Growing my own vegetables.
Yeah.
With some high walls.
Yeah.
And hopefully some private security.
There's an irony there, isn't there? Like, I mean, I work in tech, you work in finance, and you would think if you didn't work in these worlds, well, they're invested in the future of technology and they're invested in the future of banking and they'll have solutions and ways to fix all of this. But I really, I'm in the same boat as you. Like, I'm like, I don't think this is going to end well. And I don't know if you did you ever see the documentary? I think it came out in 2004 or 2005. It was a film called Collapse by Michael C. Ruppert. And it's quite a weird story. But he was an ex-CIA agent. And he came to prominence by accusing publicly the CIA of selling crack, like deliberately within Los Angeles. And then later on, further down the line, this documentary crew wanted to interview him about that, but all he wanted to talk about was peak oil. And so the documentary is sort of is about that and set against the backdrop of what's going to happen when the oil starts to run out, and it's really fucking dark viewing. And it's basically him saying, like, to begin with, and remember this is in 2004, 2005, he's saying, like, to begin with, we're going to start seeing a lot more Middle Eastern military activity. We're going to start getting desperate for gas pipelines. You're going to see military presence in places like Syria, and all of this stuff has become true. He committed suicide in, I think, 2000.
Committed suicide. two to the back of the head, yeah?
Well, I don't fucking know. Like, when I read that he had committed suicide, I was like, oh, come on. But it sounds as though there's, interviews with his wife and everything, and, they were living off their land and everything, and she seemed to think that he had genuinely killed himself. But yeah, a lot of what his whole thing was about was that things are going to get really ugly. And it really fucked with my brain for a good, 2 or 3 years after I saw that documentary. And it shifted what I thought society would be in the next few years. I really thought, well, the oil's going to run out, so everything's fucked. And I was thinking, when I first got into crypto, I thought it wouldn't hurt to have a little nest egg in this far-flung thing where if everything does go to shit, at least I can draw out some money, or I can charge something to this card and then feed the family for for a day.
Maybe move.
Or maybe move, yeah. I suppose in a perfect world, I would have an escape plan similar to yours, jump on a plane, get the fuck out of here, private security, and then just sit and watch it all unfold on the internet. But I don't imagine that I'll have the resources to be able to do that anytime soon.
No, nor do I, sadly.
No. Still, though, maybe some sort of underground bunker.
I mean, look, there's a reason why Peter Thiel and all the biggest, tech entrepreneurs and all the rest have bought up half of New Zealand, right? They're all building bunkers. They're all building somewhere that's, yeah. New Zealand have actually had to ban overseas buyers of land.
Really?
Yeah, and this is a big question, right? Where do you actually go? Because this is a global, I hate to say the word, but pandemic. It's a pandemic of debt. It's a pandemic of government oversight and overreach, frankly.
Yeah.
And there are very few places you can actually escape it.
Yeah. I
If
suppose.
I knew, I'd probably be there.
Yeah, yeah. I suppose like the next best thing is a kind of like panic room in your city townhouse or something. But I mean, I've got a shed, so that's
So I've been admiring the.
Yeah, I mean, one day it might be a studio. We'll see if the apocalypse hits before I finish turning it into a proper studio. Okay, cool. And then last question, promise. You've worked in hedge funds for a while. There's rumors and stories that happen about what high society and city finances get up to when the curtains are drawn and the lights are out. I'm just curious to see, like, what's the most outrageously opulent thing that you've observed at one of your city hedge fund parties? You don't have to name who was involved or what the client was or anything.
No, it's a great question. Because funny enough, I asked that question and there's a conference called Euro Hedge that used to be in Paris, and we always used to end up in the Buddha bar. Yeah. And I, for some reason, got invited onto the top table with all the very senior guys and ladies. And and because the hedge fund industry is quite, I'm pleased to say, quite reasonably broad church when it comes to diversity. And I asked the same question, and everyone was like, "Oh, no, I couldn't possibly tell you, right?" And then afterwards, a few of them sort of sidled up to me at 3 a.m. and said, "Oh, he should have seen it. There was this one time we all got flown out by Learjets to Brazil, and then it was a private plane down to, and there were platters of this, that, and the other, and naked ladies here and there everywhere." Now, unfortunately, my experience has been none of that.
Yeah.
I haven't really had any sort of super glamorous or exciting experiences, and it's all very dull. Probably because I work for quant hedge funds, so most of the guys I deal with are techies, so they're very technical people, and like your crypto mining cousin, most of them like to be in a basement looking at data rather than
getting up to all sorts. Yeah.
Getting up to all sorts.
Yeah, I had a similar sort of thing like back in the day. My then girlfriend knew that I worked in the city in a bank and wore a suit every day, whereas she was sort of quite a bohemian cardigan wearing girl with dreadlocks, and so I think like in her mind I was this sort of city high flyer or whatever, probably because I had led her to believe that I was a city high flyer, but yeah, like she would say stuff like oh, I bet you get up to all sorts. I bet the sort of parties that you go to in this. Oh God, like tell me about the debauchery, and I'd just be like, I work in recruitment. Are you fucking kidding me? Like, I work in a basement, and people throw CVs at me. Like, that's my life. Anyway, right.
I'd love to tell you it was more glamorous, but unfortunately not.
All right. Well, not to worry. That's more glamorous than I get out in my shed coding. But yeah, thanks very much for joining me, Tom. If people want to like hear more from you, or like, I don't know if you're doing sort of speaking stuff now, or if you want to give us the name of any other podcasts that you're on, or.
No, that's very kind of you. But no, not at all. But yeah, people can reach out via the link on here, and if they are interested. But I doubt anyone will be interested in any more of me for now.
All right, mate. Cool. Well, thanks very much. Catch up soon.
Thanks a lot.
See you later.